you look at your funds currently, what are your biggest AI exposures, if I could ask it that way?
First of all, David, thank you. And I think you're raising a very good point and giving incredible perspective to what's going on here. We have never seen concentration in the market like we're seeing today towards very few stocks. In fact, if you go back to the Great Depression of the 1900s, so 1929, we are higher, or we did reach a point that was higher today in terms of concentration than back there. If you measure it by using a Goldman study, the largest cap in the world, the largest cap stock, I should say, in the S&P 500, divided by the 75th percentile stock. So if you look at the bottom quartile, the top stock there, an easy way to get at concentration. This can mean one of two things. Either we're about to see the market broadening out dramatically and a more healthy market than concentration is not a good thing usually, or the other two times, or a number of times we've seen this, is right before we're going to go into a very significant correction. So 1973 and 2000, you saw peaks, but in 1932 and 2009, you also saw peaks like this in terms of concentration. And the follow through there was a bull market that broadened out and benefited more stocks. So I think that's a great setup. In terms of AI, I think we have to look at every company through an AI lens because it really is going to separate the winners from losers. And when we see such concentration, and especially the move in Nvidia, so let me set this up and give you our experience with Nvidia. We got into Nvidia in 2014 when it was on this split adjusted basis, a little over $4. And of course, today it's $1,200. We rode that stock in the flagship portfolio up to roughly $400. So that's 100-fold increase. And then we were saying to ourselves, wait a minute, if Nvidia is going to keep running like this, the only reason it should deserve to do that is if it's going to benefit a lot of other companies. And we began to look at what those other companies might be. Now, we do own Nvidia in our more specialized portfolios, both, in Europe, Asia, and the US. In the flagship, though, where the real estate is more dear, and we need to be exposed to all of the innovation platforms, the 14 technologies that are evolving, we did pull away. And I suppose it was a bit of a statement, but we said, hey, if this is not going to benefit other companies, then what is this move in Nvidia all about? And while Nvidia has created just an incredible company, all praise to Jensen Huang for seeing the future, and we heard him back in 2014 and rode the wave. But now AI has to play out elsewhere in a very big way for Nvidia and others to deserve their valuations.
Cathie Wood goes off and details how Nvidia has done so well for so long. Yet, amid this euphoric rise, a tale of caution and speculation clouds her mind when it comes to the future of Nvidia and what we might see in 2025. According to Cathie, Nvidia is by all means coming out of this a winner, but there are some critical patterns that the average Nvidia holder should pay attention to, and she is going to finally bring them to light. Whether you're a bullish believer or a bearish skeptic, this Nvidia stock info is something you won't want to miss. Welcome back, everyone, to Investocracy.
We want to focus here on private assets. And Cathie, you, of course, have a ARK venture fund that invests in private companies. And among those holdings are a couple of names that are familiar to everyone: SpaceX, Epic Games, OpenAI, Anthropic. I want to ask you about OpenAI because following yesterday's announcement with SoftBank and Oracle forming this joint venture with an initial investment of $100 billion, that company, OpenAI, just got a lot more valuable. How are you thinking about how much you want to maybe not double down or increase your investment in a company like OpenAI?
Well, yes, we have a nice exposure now. And, it's interesting to have watched that announcement because we know how close Elon Musk with his XAI is to President Trump. I think what President Trump is doing here is spreading the wealth. I mean, there are some very innovative companies who are going to accelerate this AI age, which in itself is moving at an incredible pace, like a pace that we've never seen before. What we're acquainting Stargate to, so this is the $500 billion project, is to the building out of the highway system in the United States. If you look back and put that investment into 2025 dollars, it's roughly the same amount. So these are the digital highways that are going to transform everything. They're going to transform everything and really accelerate GDP growth in a way that I think most people do not understand right now.
And let's talk a little bit about wrappers. Of course, we're talking about the ARK Venture Fund. It's a closed-end interval fund because you can't yet directly put private companies, private bonds, private credit into an ETF. You have seen some filings come through to that effect, though. You think about what State Street is trying to do with Apollo, for example. I haven't yet seen private assets ETF filing come from ARK, though. Is that something that you're potentially thinking about?
Well, right now, we're very happy with the interval fund structure. So this is a 40 Act fund as well. An interval fund allows daily inflows and quarterly redemptions up to 5% of NAV. That seems to be a better wrapper, I would think, for these public-private funds. Roughly 80% of our interval fund is private, 20% is public so that we can allow for redemptions. And I think the most important thing about this interval fund, as would be true of an ETF, of course, is the democratization that this is allowing for venture capital. Finally, retail investors with less than, I think I'm not going to get this exactly right, but $250,000 in income per year and $1 million in net worth, they have access to some of the most amazing companies in the world at much earlier stages than has been the case historically. So we're pretty excited about this wrapper.
Since its inception in 1999, Nvidia has astounded investors with a colossal 335,000% increase in its stock value, translating to a compound annual growth rate, CAGR, of 30%. Yet, it's not all sunshine and rainbows. There have been rocky roads along the way. Markedly, Nvidia has experienced 4 significant stock drawdowns: 2001, 2008, 2018, and as recent as 2022, illustrating the volatile nature of the semiconductor market it operates within. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Just to push back on that a little bit, there's this ETF called XOVR, the ER shares public-private crossover. It was basically an ETF living in oblivion doing an active strategy. It changed its focus to add a little private. 15% of the stock of the ETF is now SpaceX. Since it did that in December, the flows have come in gangbusters. It's now double your venture fund, which has been around for longer. Is it just the case that people want it in ETF, even if the ETF trades at something like a hybrid closed-end fund with premiums and discounts? People just prefer that wrapper. Does that concern you at all?
It doesn't concern me. I think the more access to innovation anyone offers, the better for our markets and the better for our competitive positioning around the world. So it doesn't bother me. It doesn't mean we won't do it ourselves. And I will tell you that mutual funds, many mutual funds have allocated 15% of their portfolios to private companies as well. They don't disclose their holdings at the end of every day like ETFs do, so maybe they don't get as much publicity. But this has been done before. And I think as more and more people understand what our fund is and the kind of access we do have to these incredible ideas, I think there's a place for both.
As of now, we are on an upward trajectory, thanks to the booming interest in artificial intelligence. Nvidia's operating margin has reached a whopping all-time high of 63%. But as history teaches us, what goes up must eventually stabilize, especially in a cyclical industry. Nvidia's outstanding fiscal performance today is brought into question when juxtaposed with its significant market valuation of $3.5 trillion and a price-to-earnings ratio nearing 54, nearly twice that of the S&P 500 index average. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
You know, just in market terms, it's been striking that Nvidia shares, they've been mostly sideways since the middle of last year, obviously after being up thousands of percent and having these massive moves higher in profitability. But is the market kind of questioning whether the value of Nvidia's head start in terms of the processing units is sustainable? How do you view that?
Yeah, it is interesting that it kind of has been going sideways the last few months. I think we're just waiting for the next big trigger, you know, either down or up. I frankly hope it's up. And I think this is not investment advice, but given the level of activity, you know, $500 billion with Nvidia as a key partner in that endeavor speaks a lot. You know, yeah. I think, you know, at this point, Nvidia is more supply constrained than being able to, and is unable to actually serve all their customers at this point. When that will end, I don't know. But I personally am very bullish on the prospects of Nvidia and all the other new entrants in this space, because, you know, we should not all give up and think that Nvidia is going to take over the world. There's, in a growing market, in trillions of dollars being invested, huge opportunity for new entrants. You know, you mentioned I'm on the board of D-Matrix. That is a company that's creating much more energy efficient, high performant inference accelerator for AI. There will be opportunities for a company like that to find their customer base.
Yeah, the pie certainly seems to be growing fast enough for everybody to get some.
The prospect of investing in Nvidia indeed presents a classic conundrum for potential investors. Should one capitalize on the current AI-fueled fervor or heed the historical lessons of market cyclicality? Positioned as it is with a market cap of $3.5 trillion, Nvidia's splendid run could face pressure if profit margins dip back to more historic norms following the AI boom. Do you dare to dive onto the state-of-the-art wave, or will you wait for the storm to settle? The floor is yours. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.